Achte deutsche Rohstoffnacht, meine Damen und Herren, hier von der Invest, leider Gottes nur virtuell. Sie wissen es schon, wir haben es oft genug schon betont, aber ich freue mich umso mehr. Wir haben hier einen Gast, der eigentlich fast von Anbeginn dabei ist, der Bradford Cook, der Co-Gründer und CEO von Endeavour Silver. Und er wird als Vizepräsident des Silberinstituts uns natürlich auch einen Einblick vorneweg geben in den Silbermarkt. Und dann werden wir in die Präsentation einsteigen. Und ich werde nun auf Englisch umsteigen. Ja, Bradford, good morning to Canada, good morning to Vancouver. Great to have you on board. Unfortunately, the 8th German Resource Night virtual, but great to have you on board again. Thank you very much for taking the time. And I just said it in German. Of course, we would love to be personal in Stuttgart and to have a lot of people around us and to talk to them, also with the Resource Night, of course. But it is not possible. So I said you will give us a short intro and insight into the silver market as you are the vice president of the Silver Institute. And then we dive into your presentation. So silver market, what is it all about? When do we see the big short squeeze?
Well, thanks again for inviting me on, Jochen. And I'm more than happy to update your audience on silver and Endeavour. So where are we in the silver cycle? Well, of course, if you recall, we really entered into this bull market over 2 years ago, both gold and silver together, based primarily on the monetary thesis. That is, that these are stores of value, and as other dollar-denominated or euro-denominated investments decline, the currency values decline, gold obviously and silver increase in value. So we had a great run in the last year. Now in the recent months, gold and to a lesser extent silver have been in a corrective phase, and it was primarily the jump in investment demand that put us into this bull market. How much investment demand? Well, here's a couple of ways to directly measure the increase in investment demand. The silver ETFs globally from 2012 to 2019 pretty much flatlined at about 650 million ounces of holdings. And yet today, those holdings are over 1 billion ounces, 1,050,000,000 as of January. That is a sharp jump in investment holdings of silver. And the other metric is the US retail market coins and bars. And we saw that number triple in 2020. And of course, with the Reddit chatter earlier this year, I would not be surprised if US coin and bar sales are up again this year. So a second direct measure of rising investment demand. But investment demand is only 25% of total silver demand. So I think for the rest of this cycle, it may actually be more important to focus on the industrial demand, which is over 50% of total demand, the remainder being silverware and jewelry. Where are we on investment or on industrial demand? Well, I like to talk about 3 disruptive technologies. From the year 2000 to about 2010, the emergence of silver nanofilms coating all electronic contacts and the explosion of electronic goods like the cell phone really drove that market. And that was the first disruptive technology that drove silver prices higher. Around 2010, solar photovoltaic power became commercial and really took off as the fastest growing component of industrial demand. Last year, solar power took 96 million ounces of consumption off of the market. And yet, if you believe any of the 10-year forecasts for solar power installations worldwide, that number actually has to double by 2030. So we can ask ourselves very simply, where will that 100 million ounces of silver come from? And then there's a third disruptive technology staring us in the face. But when we talk about the electric vehicle, nobody talks about silver. We talk about lithium and nickel and cobalt, and yet these are electric vehicles. They consume twice as much silver on their electronic contacts compared to conventional vehicles. Last year, conventional vehicles took approximately 60 million ounces off the market. And again, if you believe any of the 10-year forecasts for EV growth, that number has to triple by 2030. Where is that 120 million ounces going to come from? So you can see that the demand side looks very, very strong. And I do believe that industrial demand will actually overtake investment demand as the main driver as we go further into this bull market. What about the supply side? Very simply, silver, amongst all the commonly traded metals, worldwide is the only one that is primarily a byproduct of other metals. It's a byproduct of copper mines, lead zinc mines, gold mines. Fully 70% of new mine supply does not come from silver mines. It comes from copper, lead, zinc, and gold mines. And think about it, those global diversified miners, those companies like Rio Tinto and BHP, Codelco, they are happy to sell forward their byproduct silver, effectively hedge their byproduct silver, and remain unhedged to their main products. This is the reason why silver, amongst all the metals traded on the options and futures exchanges, has by far the largest paper position or derivative position relative to its physical holdings, physical inventories. And who are the counterparties to forward sale contracts by the big diversified companies? Well, it's the bullion bankers. But bullion bankers are not normally bullish or bearish on a metal. They're neutral, and they collect their money through fees. So every time a bullion banker enters into a forward sale contract to purchase physical silver from a big company, they instantly go into the market and position a hedge. It's not a naked hedge. It's not like a naked short. It's a covered hedge, a straddle or a collar. What that means is that as the silver price moves up, the banks can simply cover or roll over that hedge to a higher price in a different month. I actually think we're going to come into 2 weeks of strength here in the silver market, just because of the Reddit chatter in February caused a whole bunch of new hedges, shorts effectively, and they were expiries for the May contracts, which are coming up here shortly. And I believe we're going to see those roll over to the July contracts. So a little bit of strength in silver just because of that coming here in the next week or two. But this is how the market works. It's the reason why there's such a big paper position on silver. And I believe it sets silver up for a wonderful move with falling supply and rising demand. It's a perfect storm. And this is the market we're in.
That's what we love to hear, of course. Fantastic. Yeah, let's come to your great company, Endeavour Silver. I mean, we both know each other long time, just before the start of your company even. And I think you have a very bright future in front of you with, getting Terronera online, right? So I would say I set up the presentation, Brad, and the floor is yours.
Wonderful. Thank you, Jochen. We've entitled this presentation Profitable Production, Compelling Growth. And I will be making some forward-looking statements today, so everybody is duly cautioned. Our highlights are very simple. Endeavour today is a mid-tier producer of silver and gold. We own and operate 3 high-grade underground mines in Mexico. And there are really 4 key catalysts to create value for our shareholders. We've just finished 2 years of reducing our operating costs to boost our free cash flow, and we believe that by continuing to optimize our operations, we can add more value that way. Catalyst number 2, perhaps the most obvious one, is that Endeavour, amongst all of the silver producing companies, has perhaps the best organic growth profile in the entire sector, because we have not 1 but 2 new discoveries that we propose to build into operating mines in the coming years. Thirdly, this is not something new for Endeavour. Ever since the inception of the company, we've focused on making virgin discoveries in historic districts to drive value for our stockholders. And this is how you can differentiate Endeavour Silver from the rest of the silver mining group. Virtually everybody does brownfields exploration to expand existing ore bodies, but we're the only company that consistently, year after year, goes after the discovery of new ore bodies. And it works. We have Terronera and Parral to point to. And we're the only company to have these greenfields discoveries now in the development pipeline. Last but not least, we do from time to time acquire key assets through mergers and acquisitions, but typically we like to pay pennies on the dollar and add value through the drill bit. Because we're only a silver and gold producer, no base metals, Endeavour also offers its shareholders the best leverage to silver in the business. So I'm here in Vancouver, BC, our headquarters. All of our core assets are located in Mexico. We have a portfolio of world-class exploration projects in northern Chile and approximately 2,200 people work for the company. We've just finished publishing our first quarter production results, running according to plan and up 26% year on year to 1.9 million ounces of silver equivalents in the first quarter. We also recently announced our management succession plan coming up on May 12th. I will move from the CEO role to the executive and chairman role, and our CFO, Dan Dixon, will move up to CEO, and Christine West, our VP of Controller, will move up to CFO. This is a seamless internal transition. I'm not going very far. I'm still going to invest some of my time on Endeavour, but we felt it was time to allow the rising stars in our group to run the company. We also just announced the sale of a dormant asset, the El Cubo mine, for 15 million in cash and shares. And the shares are already up almost double, so that value is now almost $25 million. And because we were never going to bring El Cubo back online, and we could certainly not make $25 million if we did, we felt this was a good way to exit that asset. Also in early March, our shares were added to two major indices, the S&P TSX Composite Index and the NYSE ARCA GDX ETF. And that also caused the share price to rise, actually, in the month of March. So last year was a good year. We met our production guidance, and we improved our financial performance year on year. We got our cash costs down 57% last year to $5.50 per ounce silver. And we got our all-in sustaining costs down 17% to $17.50 per ounce silver. Cash flow was up, cash was up. All in all, a good year. 54% of our revenues last year came from silver, 46% came from gold, and you can see the impact of rising production on falling costs. So there's four financial metrics that really show viscerally the amazing turnaround that our company enjoyed last year through cutting costs at a time when metal prices started to rise. And whether it's silver margins or EBITDA, free cash flow, or cash position, you can see that we had a remarkable financial turnaround in 2020. Our 2021 outlook is for slightly higher production, significantly higher cash flow, slightly higher costs, interestingly enough, because of our profitability now, we're paying higher royalties and higher mining duties. In our development pipeline, the next core asset to be developed will be the Reiner project, currently in a feasibility study. And following that, in 24-25, we hope to develop the Parral mine. Last but not least, we're drilling in Chile for a world-class discovery. So a quick tour of the assets. Guanajuato is our first mine, acquired in 2004. It's our largest silver mine and the only one where we produce silver bars. And it's our cornerstone mine. In our first quarter this year, we got the production up 22% year on year. Grades are up 30%. Throughput dipped a bit due to a couple of events. There was a weather event that affected us for 2 weeks in northern Mexico with power outages. And then there was a power price spike through March. So we decided to run at a reduced rate and take one of our filter presses out of commission for complete rebuilding. It's now back up and running here in April. And we expect to play catch up on the throughput here in Q2. Chart left in the blue bars are the tons mined from the mine to the plant. You can see there was a nice ramp up last year. The weather events caused it to dip in Q1, but we expect to be back close to the 1,200 ton capacity in Q2 and onwards. And you can see the grades, marvelous run up in grades, peaking at 453 grams per ton in the first quarter. That was deliberate. We wanted to offset the dip in production by a spike in grades, and that will come back to the 400 gram range plus or minus for the rest of the year as the throughput rises back to the plant capacity. Overall, though, the impact on our production is more than 1 million ounces of quarterly production, which is our budget going forward for years to come. And the impact on costs, again, you can see it's quite a visceral impact with our Q1 costs, year-end costs down to $10 cash and $17 all in. Guanajuato will never be our cheapest mine because this is the mine where we have a very big royalty, 16% royalty on our highest grade ore body, and that goes into the all-in sustaining cost. So we wish we could get it lower, but we're very profitable and making a lot more money than the royalty holder. So we're happy owners. Our second mine at Bolanitos, acquired in 2007 through a group of discoveries that became commercial in 2009. And it fell on hard times in 2019, so we completed an operational turnaround last year. As a result, our first quarter production was up 50%, throughput was up 19%, grades were up 19%. Chart left, you can see the tons mined from the mine to the plant. Nice ramp up last year. The weather event again dipped the production in Q1, but the grades are on a nice trend, and so is the quarterly production. We expect to produce 600,000 ounces per quarter on an ongoing basis. And the impact on our costs, marvelous. Now, the value split here is 80-20 gold, silver. And as a result, the costs are significantly negative because we take the gold as a credit against the cost to produce the silver. Moving to our third mine, El Compass. This is our newest and smallest and most gold-rich mine. It's a steady state operation. Q1 production was relatively flat. Year on year, throughput was up 7%, gold grades up, silver grades down. And we typically budget about 200,000 ounces of production on an ongoing basis at El Compass. It's making money. It's never going to be our biggest mine. Again, because it's gold rich, the costs are negative, but it's basically chugging along steady state. So let's move now to our development pipeline of projects. First up is our Terronera discovery in Jalisco state. And at Terronera, we have not only our next core asset, it truly has large and low-cost mine potential. When Terronera is up and running, it will effectively double our production and half our costs. This is a district-scale opportunity. We modeled last year a 6 million ounce per year mine for 10 years off of 80 million ounces of reserves and resources. The reserves and resources are contained in 2 ore bodies. We think there's more ore bodies to be found on the property, and we added new properties shown in the green last year. We're now drilling these areas. We completed a final pre-feasibility study last year, and even at significantly lower prices, $16 silver, $1,400 gold, the internal rate of return on the project is 30%. With a payback of 2.7 years. Look at the costs. Again, the value split here is 60% silver, 40% gold. And taking the gold as a credit, the silver is free. Cash costs are zero. Even on an all-in sustaining cost basis, we expect to produce silver at Terronera for $2 an ounce. This is a remarkable discovery. We found it, and we now propose to build it. Last year's pre-feasibility study base case and spot case are shown here. And if you apply the current prices to last year's study, you can see the impact on the net present value is more than double. On internal rate of return, double. Payback period, half. And the average annual after-tax free cash flow, $52 million. So this is a tremendous asset. And we are now in a final feasibility stage. The schedule from here is that we hope to receive the feasibility study this summer, go to the board for a development decision, and break ground by the end of the third quarter. It's about 2 years of construction and commissioning, so we would like to see cash flow from Terronera by late 2023. Here's the 10-year minimum production profile, silver, gold, and the silver equivalent grades in the red dots. You can see the grade profile, almost 500 grams per ton at the beginning of the mine, even still 350 grams per ton at the end of the mine life. This is one of the highest grade mines in the silver sector. So in the feasibility study, we've identified a number of upside opportunities. We've already expanded the property size. We're already drilling to expand the resources. We're now evaluating an increase of the plant capacity from 1,500 tons per day up to 16, 17, 1,800 tons per day. We're optimizing a number of other aspects. And to reduce our carbon footprint, we're actually looking at a slurry pipeline from the plant to the tailings facility. Again, to reduce our carbon footprint, we're evaluating natural gas power on site and solar power on site. So the next steps really are to line up the debt financing, somewhere between $60 and $80 million, bring the feasibility study to the board in the late summertime, and then commence breaking ground by the end of the third quarter. Peral, I'll just mention briefly, is next up after Terronera. In 2024 and 2025, we propose to build a 4 million ounce per year mine at Peral. And we have already 40 million ounces in resource. So for 2 years now, it's going to be an aggressive exploration program to see if we can't get to 60 million ounces or higher. And because Terronera is a 60-40 silver-gold split and Peral is 100% silver, we are actually not only one of the most silver-leveraged mining companies in the space. Through the development of Terronera and Peral, we become even more leveraged to silver. Last but not least, Chile. This is near and dear to my heart. I'm an exploration geologist, and we've 3 fabulous prospects, world-class exploration targets in northern Chile. We staked them during the bear market. We spent several years and several $1 million getting them drill ready. Cerro Marquez has turned into a porphyry copper gold project, so we're shopping for a copper partner on that one. Paloma, we're currently drilling. It's a multi-million ounce gold silver target, and we hope to have initial results this quarter. And Aida is a true multi-million ounce silver lead zinc target. We don't have our permit to drill yet, and we hope to have it by year end. So all of that adds up to sector-leading organic growth. In terms of cash flow growth, we just came off of 2 years of driving our costs down while prices were rising, and that double whammy meant that we had the fastest cash flow growth in the entire sector. Through our development pipeline of discoveries, we have the best production growth profile in the sector. Terronera alone will double our production. And in Chile, we have exposure to discovery of a world-class deposit. 158 million shares currently outstanding, $830 million US market capitalization, good daily liquidity. We're listed on the big boards in both Toronto and New York. We finished the year with 61 million cash and 70 million of working capital. 15% of the shares are owned by the 3 share indices. And we have one strategic shareholder, Fresnillo PLC, holds 2% of the stock. So that's it. Basically, we have a company that is geared for growth. We have just come off of 2 years of optimizing our operations and feel we can do more of that. We can double our production by building Terronera. We can continue to extend the mine lives through brownfields exploration. And we're hoping to make a world-class discovery in Chile. So why invest in Endeavour? Truly, we have an experienced management team who simply through the development of our existing development pipeline of discoveries expect to become the next senior tier silver producer. We have a strong balance sheet, no long-term debt, and we're a pure silver gold company. Thank you very much.
Wow, Bradford, thank you very much. That was absolutely perfectly in time. That's great. One question from my side. With Terronera, I saw you have $60 million already in the bank and a working capital of 70. But you still said you want to raise probably some 60 to $80 million, but this would be a debt financing, right?
Yes, primarily debt financing. We obviously have lots of cash and cash flow. So any equity component is already covered. And our expectations going forward is that the CapEx, the capital expenditure, will rise to about 125 million plus or minus, partly because last year's study assumed lower metal prices. So we pushed a lot of the capital investment into the what we call sustaining capital. Like buying the mining equipment, we actually proposed to lease it in last year's study. This year, we're going to propose to buy it. We've already started buying the mining equipment. We had a $9 million capital budget in the first half of this year to purchase our equipment, get started early. So I think there will be a higher capex, but it gives better financial returns compared to the leasing.
Absolutely. And you said by the end of 2023, if I got that correct, it would have already a positive impact on the production, right?
Correct.
Fantastic. When do you expect then the full commercial production?
We would target the year end of 2023.
Oh, that's really fast. So that's something like, what is that, 20 months from here? That's fantastic. That's really fast. Super. Yeah, maybe one last estimate from your side. Where do you see the silver price by year end, or maybe for next year? Meaning, not that I want to ask you about your crystal ball. I sold mine last week also, but the thing to me is, it is very interesting when you look at wallstreetbets.com, when you look at the silver markets. I just had a very nice chat with our friend Martin from Julius Baer, and it's so interesting to see where the markets and the, let's say, trading is heading. Like, for example, the Sprott ETF is getting more and more gold ounces than ever. And it looks like also with the silver ETF, I heard from the ZKB in Zurich, they are going on full throttle to fill up their vaults. And then you said also, like with e-mobility, with solar, those are themes which are not diminishing. They are rising and rising and growing. And so to me, it looks like, I mean, okay, Terronera comes on stream. This is beautiful, but this is not solving the problem. Max Silver goes on stream. Yeah, we have maybe 2-3 larger copper mines which have a silver stream on board. If we look at Osisko Gold Royalties, their silver stream is growing, but this is definitely not solving the problem. So could we see silver prices $50, $100 in the next 5 to 10 years?
Well, I won't pick a number, but I think it's reasonable to assume that the long-term trends for silver are actually stronger than gold. That's why the gold-silver ratio is falling. And, you know, the last time we were in, let's call it a mini bubble in 2011, that ratio got down to 31. If you want the mother of all gold bubbles in 1980, the ratio got to 16. So right now it's 70. Where do you think it's going? So silver will outperform gold over the rest of this bull market, and there's several years to run in it. And because silver, unlike gold, also has a strong industrial component, and you need silver for a green economy. I mean, the millennial investors are just waking up to the fact that you can't have solar power, you can't have electric vehicles without silver. And there's not enough silver to affect the prices of those technologies. There's just not, they don't use enough silver to affect their prices. So it looks really good for silver. I think that the 3 to 5 year outlook is a multiple of the current price. I think it's remarkable that we're holding at $25 US per ounce silver. And I would not be at all surprised if by year end we're back testing the $30 recent high. And, you know, we had a $49 high back in 2011. We're going to break that in this cycle.
Fantastic. Super. Thank you very much, Bradford. Well done. Great presentation. And thanks also a lot for this great silver market insight and outlook. Wish you all the best. And we look forward to speak very soon and hopefully to see us finally again. Jesus Christ, this is such a long time ago. It's over a year now when we saw us in Toronto. And keep safe. All the best to you and good health. And we talk soon, I would say.
Fabulous. Thanks, Jochen.
Thank you very much, Brad. Ja, meine Damen und Herren, das war Bradford Cook, der Co-Gründer und CEO von Endeavour Silver. Endeavour Silver ist ja einer der größten oder einer der Top 10 Silberproduzenten auf der Welt. Das wissen Sie natürlich, weil Sie uns schon oft zugeschaut haben und den Brad natürlich in Stuttgart live gesehen haben. Was aber fantastisch ist, ist definitiv, dass Terronera jetzt definitiv in die Planung geht für den Bau und wie er sagt, kommerzielle Produktion bereits Ende 2023. Das wird die Firma signifikant umkrempeln und ich denke auch der Aktienkurs wird massiv nach oben gehen. Sein Ausblick über den Silbermarkt, denke ich, dem ist nichts hinzuzufügen. Es sieht super aus. Die Frage ist, wie hoch geht's? Der Bullenmarkt wird weiter laufen und wie er gerade so schön gesagt hat, ein Multiple from today's Silver Prices. Das ist genau das, was wir auch sehen. Wir haben Kursziele zwischen 50 und $70 für Silber für die nächsten 3 bis 4 Jahre und von dem her Endeavour Silver ist definitiv nicht Top-Firma und eine Top-Investment-Überlegung. Vielen herzlichen Dank fürs Zuschauen und wir machen weiter mit der Deutschen Rohstoffnacht.